I got Judah Hoover here, which I'm super excited. I put it out randomly yesterday, and like you hammered me. You texted me, you messaged me, and you called me.
So one of my lessons in life is one of my like mantras is find the spotlight, step into the spotlight.
Yes.
You know, and then just go from there. And that sounds kind of braggy, showy, whatever, but really it's just like go to where the action is, go to where stuff is happening, seize opportunity.
Yes.
You know, now this was definitely an opportunity to be on a podcast and get my name out there, and hopefully you spell it right. You know, I don't care what you say about me as long as you spell my name right. But really, I saw an opportunity.
Yeah.
And so I said, great, I'm going to like this post, and I'm going to say me, and then I'm also going to say, well, I don't want to just let it go at that.
Yeah.
You know, remember in the old days when you used to have to fax something?
Yeah.
You would fax, and then you would call and say, Mr. Neidliner, I just sent you that payoff request, or I just faxed you that order. Can you just confirm that you got it, please?
Yeah.
You know what I mean? So, so that's I think the lesson there is,
if you want something, you got to go get it.
go get it. No one's. Who's the guy who plays the new Superman and Harvey Caviezel or whatever his name is? Russell Crowe talked to him when he was young.
Yeah.
And he was like, listen, here's the thing about Hollywood. No one's going to give it to you.
Uh-huh.
You've got to go get it. It's the same thing with real estate investing. Do you know what one of the most annoying things that happens to me is? People call me and they're like, hey, Judah, like, you really know, like, everything. You've got all these connections. Like, if you find a good deal, like, let me know about it. And, like, if you have a contractor and, like, you know any hard money guys, like, you know, bring me in on that deal. I'm like, politely, like, what do I need you for? Like, no one's going to bring you everything.
Yeah.
You've got to be the one to go get it. You've got to be the one to line it up. You've got to be the one to make it happen.
Yes. Well, anyway, 10 people reached out, and you were like, definitely. I got your text or email. It wasn't even a choice. I had to give you a call.
I
back.
appreciate that.
And so Judah has his own, you have your own mastermind, right?
Yeah.
Your own, is it monthly? Pretty much?
Yeah, it's a Landlords and Investors Mastermind Group, LIMG.
Okay.
We meet once a month here in Harrisburg. We cover real estate investing here in central Pennsylvania.
And I used to come a lot when I have 2 younger kids now, so it's a lot harder for me to go.
Not just 2 younger kids. You've got a construction company, a property management company, a real estate team, a title company. Like, you know, I mean, you take my approach to real estate investing. You know, a little bit of everything.
But I've been to your group. I've met friends at your group, and then I've even mentored some of those people and just helped them just from being part of your group. Yeah. So a lot of good people that come there, and I would highly recommend if anyone's wanting to get out. I always recommend they go out and join those groups and get action. I met a partner of mine that we own 250 rentals from going to one of those type of groups.
Wow, that's amazing. Yeah, it's just that's why I say find the spotlight, step into the spotlight.
Yeah.
You know, you never know what's going to happen next. My sister Jana. She's a financial planner with Edward Jones, and she always says, "Just get me to the interview. Mm-hmm. You know, just get me to the interview. I can sell myself from that point forward." It's amazing what just happens when you get together and sit down and talk with people.
But part of what you just said kind of sparked something. I heard something. One of my friends on Facebook put out this morning. Don't wait till you're 100% ready to do something like real estate.
Yes.
Like if you waited till you were 100% ready, you might never do it.
Right. Yeah, that reminds me of something that I took a course on making courses. Now, you and I have both, like, I mean, I've spent, you know, tens of thousands of dollars on books, tapes, and seminars.
Yes.
And we're smart guys, so you can kind of figure out how to make a course. But I wanted to take this course on making a course just to fill in some of the gaps and, you know, confirm some of the things. And one of the things that they said is move forward at 80%. If you think something's 80% done, move forward with it. Like if you're making a form for your course or you're shooting a video or you're doing this, like you can tweak something forever. And I realized that doesn't just apply to information technology. Information products. That applies to everything. If you wait till you're perfect, you know, if you can let perfection be the enemy of good, and then you never actually get any good done.
I agree. And I know people that have said they're going to buy a rental for 2 years, and they don't find the right one.
I always refer to it as the elusive first deal. Searching for that elusive first deal.
And they've been watching us and knowing that we tell people to buy rentals, and we have rentals, and they know it.
Right.
But they want the right one.
Right. I just wish everyone would buy their first 2 or 3 or 4 rentals, full price, boring, starter level townhomes.
Yeah.
You know what I mean? Like like everyone thinks that their first rental has to be something that they hit out of the park, or it has to be like some, you know, crappy row home in the city that they rehab and they make this big back end on and it cash flows all this money. How about like it's like baseball. Try and get on base first. Yeah. I know you're a wrestler, you know, famously wrestled for Penn State and have all kinds of state, you know, titles and championships and everything.
Yeah.
But like, you know, use a baseball analogy, like just get on base.
Yeah.
You know, don't swing for the fences. Don't strike out. Just get on base. Buy a single family townhome. I love townhomes because they work really great as rentals, and then you can, you know, 2 to 3 to 5 years later sell them.
Yep.
If they're built in the last 10 to 15 years, not much goes wrong with them, and you can just hold them. And they rent really quick. You get a good high quality person in there, and I would just say to anybody who's looking for that first deal,
yeah,
even if you pay full price. I mean, think about it. Think about this, just real quick analogy. I have no idea where you want to do with this conversation.
Correct.
But this is what I tell people. Let's say you bought a $250,000 townhouse, because that's basically starter. I'm over in the Lancaster, Harrisburg area. You're here in Carlisle, but 250 is kind of bread and butter, you know, entry level housing these days.
Okay.
So let's say you buy a full price. You know, everyone says you got to make your money when you buy.
Yeah.
Well, let's just say you paid full price,
yeah,
right? And I went out there and I thought that I had to beat up the seller and find a motivated seller and negotiate hard and bring in my contractor and get it done for as cheap as possible, get as nice work done as possible. And let's say at the end of the day, after I buy it, pay my interest, pay my contractor, and then refinance out, you know, do the typical Burr method, right? Let's say I'm into it for 80%, right? So let's say I have like a $200,000 into my $250,000 home, right? And you have $250,000 into your $250,000 home.
Mm-hmm.
10 years from now, those homes are both going to be worth $600,000.
Yep.
Like, and we worry about, you know, a little bit, and let's say, remember all that effort I put in?
Yeah.
I put a lot of effort into that, right? And a lot of risk and a lot of stress. What if you, in that same amount of time, bought two $250,000 homes that you paid full price for, that you basically have zero equity in on day one?
Yep.
10 years from now, you have $600,000 homes, and I have a $600,000 home that it looks like I started out higher in.
100%.
I mean, isn't that what most real estate investors get to? If you look at a lot of the development deals you're doing, a lot of the apartment complexes, like, yeah, you look to what can you do to make this better and stuff like that. But it's the beautiful thing about real estate is even if you just pay full price, cash flow it, and wait, boring is better than nothing. I think a whole lot of people chase sexy and get nothing. Mm-hmm. Chase boring and get something done. Play in the shallow end of the pool, get wet, figure out how real estate investing works, and then complicate it.
I bought an 8-unit 7 years ago.
Yeah.
I bought it creative financing. I didn't have the 20% down.
I love creative financing.
This particular seller said he wanted $700,000 for 8 units, which it was nicer stuff than I had bought. It was in Mechanicsburg. It was 8 townhouses. 2 buildings.
Less than $100 a door.
It was
in Mechanicsburg.
It was in Mechanicsburg.
Yeah, West
seven years ago.
Yeah.
He did a 4.5% rate on a 20-year AM.
Any balloon?
A balloon in an 8-year balloon, an 8 or a 10-year.
A balloon means that, like you know they amortize it out over 20 years, but like it's got to be paid off in 10. I think it was 8 years.
I think it was an 8 or 10-year deal.
That's
I can't
still
remember.
Ridiculously long. I mean, anything more than 2 years is a long balloon.
But I only put down $40,000.
Yeah.
And like I looked at my cash flow, and I didn't really make a lot per month. And I went in there and I started raising some rents, and I know it was cash flow positive, but it also needed some roofs down the road. Like there were some things. It wasn't. It looked nice though. It was this. Oh, it had their own entry.
Right.
It was nicer stuff than I had had. And so what I did, I kept that 7 years. And 6 months ago, I said, I'm just going to sell it. I walked away with $330,000.
Dude, that's awesome.
From something that didn't look good. So this is exactly what you just said. Buy a townhouse. Maybe it doesn't cash flow. Maybe it breaks even for the first year or two. Then it starts to make money. And then you sell it and you make 100. Maybe you don't make 200.
Because even if it breaks even, you're still getting principal reduction.
Yes.
You know, that's what everybody. Hold on. I mean, you say 350,000. You also had cash flow. You also had tax deductibility.
I did.
You know what I mean? So there's those.
I'm sure there's some
those,
tax payback I've got.
Sure. But still, it's a conversion of earned income to long-term capital gains, with the depreciation and stuff like that. Anyway, here's what everyone when they look at real estate, I think they underappreciate. I actually learned this from Steve Lloyd. Do you know Steve Lloyd?
I just met him. He's in my mastermind.
Oh, okay, gotcha. So Steve has been a buddy of mine for 10 years.
Okay.
And I've had Steve come and speak at my group. Now Steve owns he has 2 different yachts, and he has to pick which one he lives on down in Siesta Key. I mean, it's a hard life being a real estate investor if you just go boring for the long term. But yeah. Steve's the one who told me almost 10 years ago. He was speaking at my club. He bought a lot of notes, and he was like, "Dude, I just love the principal reduction." I was like, I never thought about that before. It's not just about the cash flow. It's not just about depreciation. We don't stop and think. If you buy a $250,000 house. Yeah. You're going to think about, well, how much is it going up in value, and maybe it goes up in value, a couple grand a year, or maybe I get $150 worth of cash flow a month. Net, cash on cash return, just straight positive cash flow.
Yeah.
But you're probably getting $350 to $400 a month in principal reduction.
Yeah.
That's retiring debt is the same thing as adding money to savings. It's everyone talks about cash flow, then appreciation, then the tax benefits, and by the way, also principal reduction. That's kind of the way people rank things. I think you should look at cash flow, then principal reduction. I think that principal reduction is just far too often overlooked in how a deal is performing for you, or will a deal perform. Does that make sense?
Yep. So I got we'll just talk about another example real quick. So let's say someone doesn't have the $40,000. They have no money, right? But they're good at finding deals.
Right.
So my brother actually. Mike, Mike found a 20 unit for us. It was right down the street.
Nice.
He'd been working the seller for 3 years. We know the seller. Seller finally says to Mike, I want to sell it, and I want $1 million for it. So Mike calls me up and says, I said, Mike, we don't have $250,000 to put down on that property to 20% plus the closing costs.
Right.
So we're here in Berkshire Hathaway, and our one owner here is Doug. Doug Rebert.
Yep.
You know Doug.
Yep.
So I went to Doug and I said, Doug, do you want to look at this property with me? And he said, let's go look at it. So we were down there. I remember it. We went and looked at the 20 unit. Doug says, I'm interested. And I hadn't really penciled out how to do it.
Right.
I just had what Dave Zook had told me. Do like a 75-25 split on the cash flow.
Yep.
And then on this particular one, we were going to be 50-50 on the back end.
Okay. You should clarify that. 75% to
Doug,
right?
The one who's bringing all the down money.
Correct.
And then to us, we would get 25% for managing the deal and putting the whole deal together.
And then 50-50
on the back end.
Yep.
Was that. And deals can be structured any which way. So I was sitting in there, and Doug had wanted a pref, and I'm like, well, when you split these numbers out, it looks like a 7.5% day one to you, Doug. And Doug's like, well, I want 10%. I'm like, well, the numbers don't work 10%.
Right.
So I almost busted the deal over that. And I looked at Doug and I said, I can't do it. And I looked at him right in the eyes, and he looked at me back. He says, let's do it anyway.
Nice.
So he brought the 300. We needed 330,000.
Because of closing costs and everything like that. Yeah.
We didn't raise enough CapEx.
Right.
So CapEx is the money to do extra fix-ups.
Right. When you buy something, there's a reason somebody's selling it. No one sits down at a closing table unless they're reasonably certain they're going to be better off when they stand up.
Mm-hmm.
So somebody sits down at a closing table to get rid of a problem, or somebody sits down at a closing table to accept opportunity.
Yeah.
And so whenever somebody's selling something, there's usually a reason for that, and that's why you need to raise some CapEx money going into it.
Fixing up the hallways. We just did, even though they looked good, we needed to make it nicer to start improving the property.
Right.
So we didn't have it. We didn't have a lot of CapEx. So we did it out of cash flow. So we owned that property about 5 years. Okay.
Excuse me.
So just a few months ago, and our cash flow on our 25% was like $1,200 a month. Not bad. Not bad. And then I made a
not bad for not bringing any money to the table.
And then I made a management fee, which helped cover my property managers here in Carlisle. And then I went to Doug a few months, like in December, and I said, hey, I think we could sell this. We bought it for $1 million. So my brother, we went back to Mike. Mike found a buyer. We didn't list it. We didn't do anything.
Right.
We found a buyer and sold it for 1.85 million. Wow. So Doug got all his money back.
Right.
He got 8.8% return on his money during the life of it.
Right. So that's called the annualized return.
Okay.
You take you take how much money he made, divided into what his principal investment was, and then divided by the number of years that it was tied up, and that's how you figure out your annualized return.
So you know all this sophisticated stuff.
Right.
I don't quite know it like that. But
that's just an important thing to consider. You know what I mean?
Because 8.8% return was good, right?
Yeah.
And then so after Doug got his money back,
For him not having to do anything.
nothing.
Yeah.
He never. I don't think he ever went to the.
And I was going to say, you also, I'm assuming, he didn't co-sign on the mortgage, right? You got the loan 100%.
Well, that was a tricky spot because he originally was going to have to, but because of our local bank that we're friends with, we said Doug's just not going to do that.
Right.
So they let me do it.
Right.
So I was the one that signed on the loan.
Nice.
And so here's the good part. So we owned it a little over 5 years. Doug got all his money back, his $330,000. And then Doug got a check and we got a check.
Yeah.
It was 50-50.
Yeah.
$440,000 each.
Wow.
2 months ago.
That's awesome. That's awesome.
So was it better to sell it or keep making my $1,400 a month?
Yeah, I mean, I know a guy who owned, and this was in 2010, I think. My buddy Ed was telling me this story, and this was when $1 million was something. He had a $1 million office building. Okay. He's like, yeah, I should have sold it when it was worth $5 million. But I was just hoping that the value would keep on going up. It's almost like stocks or something like that. Yeah. You know what I mean? If you've got a good profit, take your money off the table and look to go ahead and do another deal. So I just think you have to look at what your own individual plans are. Do you know Mitch from Texas?
No.
I think he's a member of your mastermind group. He is in the Houston area of Texas, and he owns 40 Class C plus rentals. You know what I mean? Not great areas, and they're free and clear. And he calls that his moat. He says, I'm not selling any of those ever. Yeah. Those are what, no matter how much I screw up over here, I've always got this. So, I mean, you ask, should I sell, shouldn't I sell? You just have to ask yourself, what does this piece of property, how does this factor into my overall strategy?
I used to be like, never sell anything.
Right.
But when the market gets to the peak, or when you think it's at the peak, and we're coming down from that peak right now, if you don't have a huge cash reserve, maybe you should sell a few.
Correct.
Because you can always buy new property the next go round, in my opinion.
Right, exactly. And I believed that, or I knew that, but I didn't believe it. And now I'm disappointed that I didn't buy with both hands in 2013. You know what I mean? I've been doing this since 2002, 2003. Like, I'm 43. I bought my first rental property when I was like 22. I've always been a creative real estate investor. My buddy Sheldon he runs the Pottstown meetup. I'm going to be there talking about creative real estate investing, subject twos, and all that kind of stuff in January. I kind of lost art because cash has been king for so long.
Yes.
And appreciation's been so wild. You haven't had to worry about creatively structuring and financing deals. So I'm going to be teaching that. And that's how I cut my teeth in this business. But when you see what happened before in the real estate market,
yes,
and I think you're right. We're seeing a little bit of a dip, a little bit of a slowdown. I don't think we're necessarily going to see a whole lot of pullback in values. I mean, values are still going up. Listing, people are over listing and then they're cutting what their listing is. That doesn't mean values are going down. It just means that they were overlisting their properties. But even if we were to see a little bit of a pullback, I mean, look, we're never going to see 2008 again in our life. It's just not going to happen. And I got to tell you, the opportunities were so great in 2009, 10, 11, 12, 13. We should have been robbing banks to get the money we needed to buy real estate. Yeah. Like, we should have been begging, borrowing, and stealing. I'm mad at myself because I'm smart enough to know better that I just should have been buying every single thing I could.
In 2013.
In 2013, absolutely.
I bought 100 1 year in Carlisle and surrounding areas in that time frame.
Nice.
And every time we did it, I kept asking my private investor, am I making a mistake? Should I keep doing this? And my private investor looked at me and says, Rob, you buy every damn one because you'll look back and not even believe what happened.
Right.
And so I just kept going. Now, we did not buy the fix-ups.
Right.
So we're fixing up now. But here's the, so now my
Right, you bought full retail price and let the market take care of the growth.
Yeah. But now when I fix one up, I wish I would have fixed them up then.
Right.
Because fixing up would have been a lot cheaper then.
Right.
Now it's 4 times the cost to fix them up.
Yeah, inflation's a B word for
So
sure.
when I get a $10 or $15 or $18,000 bill for turning a unit, I'm like, what just happened?
Right.
But cash flow is so good, it kind of absorbs it.
That just shows how old we're getting. We're complaining about price. I never, when I would like rent places out, or I'd talk to people, and I was early in my career, and I'd be taking somebody through something. I'd be like, I can get $750 for this, I think, and they're like, I just can't believe $750 for a bedroom for a place like this,
Yeah.
and then now like that same place will rent for $1,450, and I'm walking, I'm like, I just can't believe somebody would pay $1,450 for a place like this.
A couple months ago, I texted my brother. I said, "What are they doing advertising this house for $1,495? There's no way it's going to rent for that." He said they already rented it, Rob.
Right.
Like I was alarmed. I was like, "What are they doing?"
Yeah, it's absolutely crazy. And we here in Central Pennsylvania, we're really blessed. I would never forget the time I have a property management company as well, Home 365, and we manage stuff over in Lancaster. And there's a big real estate investor out of York, had some stuff over there, and I was looking to fill it. And his girl Liz gets on the phone with me and is like, she's saying to me, typically I'm telling people what they should rent it for. And she's saying to me like, hey, I'm like, I think like $1,000, $1,200 is what we can get for this. She's like, I want you to go for $1,600. And I'm like, okay, I'll let you be wrong. I'll run the Zillow ads and do all the stuff and show you that we don't get. Yeah. I had people call me from Portland saying, what's wrong with it? Can I rent it sight unseen? Can I blah, blah, blah? Like,
and they rent it.
And they rent it. Yeah, I mean, it's just crazy how I think the real estate, we don't understand how what happened in 2008 was an economic collapse and a real estate collapse at the same time. And that almost never, ever, 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 ever happens.
Yeah.
What we're seeing is potential for an economic collapse, recession, downturn, whatever.
Yeah.
Though some people are even worried, not thinking necessarily that's going to happen. That doesn't mean a real estate problems are coming. And in fact, what's the problem that we're seeing right now? Inflation. When we're in an inflationary cycle, you want to own gold and real estate. You want those tangible assets. And I never got a rent check from gold. I don't know if you did or not.
No.
But
Now there is a bottom, right? Because real estate investment trusts and all these huge companies bought tons of real estate, like iBuyers and all this stuff.
Yep.
So don't you think if it were to drop to a certain point, they're coming back in because they've kind of pulled out?
Sure. I think that. I also think that the other thing that we forgot about because of 2008. Remember, when we have a history of 5,000 years of something being true, and there's an exception, that doesn't mean that it's going to be like that from that point going forward. It just means that that's an exception. You've probably heard the saying, there is no national real estate market. There are local markets.
Yeah.
All real estate is, what's the old saying? Location, location, location.
Yep.
Probably, unless you live in a top 20 market in the U.S., and probably they've only done enough in the top 5 to 10 markets in the U.S. to actually make a difference, don't worry about what the iBuyers have or haven't done or aren't going to do. They're not really going to affect your market. They're not really your competition. They're not really messing stuff up in a good or bad way in your market. It gets a lot of press because the big national writers on real estate can talk about them, and some of the big guys with big podcasts and stuff like that, they operate in multiple markets and they do hundreds of deals a month, some of these guys, and so they like run into them. But I think that for the average person investing in real estate, they just should let all that noise of iBuyers and all that just
and it doesn't
go.
affect us here in Central PA.
It doesn't affect.
But values have dropped 15-20% in San Diego, Phoenix, and then the Midwest, like where are some places like Missouri? Some of those places are actually feeling it. I've got guys that are flipping 40 houses in Kansas City and whatnot, and the values have dropped. Central PA just doesn't seem to drop. We're like the last two.
Hey, if you know anybody in Chicago or Detroit, I would love to talk to them, by the way. So in the past 6 months, we've opened up our property management operations out there. I manage about 600
really?
homes in each of those markets. And
Well, let's talk a little bit about that company too.
Yeah.
So I manage about 900 houses.
Right.
800 of them we own.
right,
Apartments, houses, whatnot.
Right.
So we manage 900. How many?
you basically are an in-house property manager,
Yes.
which is great. We manage about 8,000 units.
8,000?
Yeah, in about 10 different markets. Well, so Rob, I mean, think about it. Now, I'm Judah Hoover personally. I'm a realtor and I'm an investor. But as a company, we first and foremost are a property management company.
Yes.
Most property management companies are there to service a real estate arm so people can keep on selling properties, or they're there to service a big investor such as yourself. So we, about 8 years ago, decided to go whole hog on property management. There wasn't a whole lot of property management companies out there that were being run exclusively for property management. We've teamed up recently with a tech company out of Israel. We've raised about $40 million.
40.
Yeah, so we have 35 developers who are in Tel Aviv, and so we use our own tech. So Buildium, Appfolio, these are service as a software. Or software as a service, web platforms. We developed our own.
Okay.
So it's our own proprietary system.
Okay.
And we use AI technology to help us with maintenance processes and a whole bunch of other things like that. We also have a program where it's a custom rate, but we can guarantee the NOI to an owner.
Wow.
So we will guarantee that if any maintenance item comes up, we'll pay for it. If the tenant stops paying, we'll still pay you. So I remember one time, do you know who Jason Hartman is?
Yeah, I've heard the name. I know him if I saw him. Yeah.
Okay, so big real estate investor from California. Probably sells. He's a bundler and aggregator. Probably sells 5,000 houses a year.
Okay.
I remember one time being in a mastermind with him, and he was like, if only, because I was just getting started in the property management business at the time, and he said, if only charge me whatever you want, but guarantee my rent.
Yeah.
And so we not only guarantee the rent, but we also guarantee maintenance. So it kind of turns real estate investing into a bond.
Wow.
So what I love about it, I mean, I sounded way too commercial, and please forgive me for running an ad here on your your podcast. But that's how we're kind of growing, because there's a lot of people who want to invest in stock. And they do it through Robinhood. You know what I mean? Like, they don't have enough they don't know how to set up a brokerage and things like that. That's kind of what we're trying to do. We're trying to democratize real estate investing. So it makes it easier for somebody to buy 2 or 3 properties.
Have you been with this company for 8 years now?
Yeah.
How many were they managing when you got there?
So
you helped with the growth a little bit,
Yeah,
right?
when they hired Judah Hoover, they had 800 units. And they were bringing on about 35 units a month. They hired Judah Hoover, and in 12 months' time, we were at 2,000 units, and we were bringing on about 100 units a month.
Wow.
So now we try to bring on 400 to 500 units a month.
Wow.
So.
And what markets do you manage properties in?
Pittsburgh, Philadelphia, Baltimore, Chicago, Detroit, Phoenix, Las Vegas, Atlanta.
Wow. And what about local markets too?
So yeah, I mean all over Harrisburg, Lancaster,
Harrisburg,
York,
Carlisle,
the whole. We don't. I mean, I'll manage something here in Carlisle, but I'll be 100% honest with you.
Yeah.
Carlisle is not a focus point for us, partly out of respect for you and what you have going on out here. So
we don't outwardly look to manage, but we will do it.
Yeah. I got to tell you, the average property management company in the United States manages 350 units.
Okay.
It is by and large a very mom and pop shop.
Wow.
There are 25,000 property management companies coast to coast. There's a lot of them. It's like if there was only pizza places, like, the college town pizza places, but there was no Domino's, there was no Pizza Hut, there was no, bigger companies like that. That's very much what the property management space is.
Okay.
There's a couple that now, myself included, that are getting traction as we look to build a national or regional presence. But but I think it's something. I mean, I would encourage you to think of it this way, as you're bringing on private investors and as you're doing other things like that, nobody wants to change their own oil anymore. No one cooks their own food anymore. You know what I mean? No one even, you've got a real estate arm here. We go a realty arm. Like, what it takes to qualify as a fixer-upper is way less. Like, now what people want when they buy a house is it's got to be perfect. If it's not perfect, it's a fixer-upper.
Exactly.
Like, no, like that's not what that term would have been used for 15 or 20 years ago.
Yeah.
So people like to do their thing and do their job, and they outsource everything else, including property management.
Okay.
10 to 15 years ago, it would be very common for a lot of blue collar, pull yourself up by your bootstraps individuals to manage their own properties. It would be very common for white collar people not to own a rental property or 2 or 3. They would just put it in the stock market.
Yep.
And we're seeing a whole lot of change there. So we really see that's great news for us as professional real estate investors too, and anybody who's watching this podcast. There's just going to be that many. The more people there are trying to invest in real estate, I don't look at that as I don't look at that as more people who are competing to buy that property I'm looking to buy. I look at it as there's more people to do deals with.
Yep.
There's more people for me to buy or sell deals from. There's more people for me to, when they get tired, me do seller financing and buy from them.
Yep.
You've got to look at it as an expanding pie, big picture, abundance mindset.
And that's why we bring a lot of young people in here and try to teach them the way to get them started. So
Yeah.
when is your meetup group? So we want to make sure we get that.
Yeah,
out
so
there
we meet the 4th Thursday of every month at the Red Lion Hotel in Harrisburg.
Okay.
So 4th Thursday, 7 o'clock.
And it's free, right?
Come as you are. I just never wanted to charge. I know there's that old expression, like, if you don't value the content you bring to the marketplace, the marketplace won't value it either. I don't know. To me, it just seemed like charging $100 a month or something like that just seemed to be more hassle than what it was worth. And that would, impede attendance. I would rather just, it cost me like, about $1,000 a month to put on the meetup.
Wow.
And I would rather cover that and pay for that. And since that, as a company, we now run other meetups too. And if they've got your contact information, they can get mine. We run a Pottstown meetup. We run in Pittsburgh, Philadelphia. We've got them all over the place.
Well, I should come speak at yours sometime. I just did my first one with Stephanie.
Yeah.
So I went and did hers because she came on here a couple times. And
right.
We got 1.8 million views off a video we did from this. So I felt like I had to go return the favor a little bit.
That's awesome. Yeah, Stephanie is. She's got a real fire in her belly, and I got to tell you, I really appreciate I respect hustle.
Yeah.
And she's just got quite amount of hustle. I remember the first time that I saw that you two, because I follow her personally, I saw that you guys were connected. And that really made me happy. It's funny. A year ago, I asked you to come and speak, and your quote to me was, "Listen, Judah, I only have 650 houses. I'm a small guy. I don't think that I'm ready for that. Maybe a little bit." And I was like, "All right, you know what? He needs to." And so you've got your own podcast going now. You've got your own kind of thing, and it just takes a little bit to get comfortable with it. But we have somebody at the company now who we staffed somebody against event planning, and part of that is running our meetups. And so I have to get Cassie a list of speakers that I want, and you're going to be on it, and we'll get you in this year to
hopefully I can provide some value to people.
That's what it is. It's just I hope that the beginning part of this video doesn't get cut, but that's what it's all about, is provide value.
And I own 800 now, so I have a little more.
Right, exactly. A little bit more. Yeah, just lead with value.
Yeah.
If you lead with value, you don't have to sell yourself. People want to get closer to the value.
I just want to give examples of what we've done and just inspire someone to do something.
Oh, yeah. So either he's the author and perfecter of your faith, or he's the guy who started the biggest organization ever, right? But Jesus Christ, this guy who was from some backwater town in the Middle East, just taught by stories. Just taught by, hey, do this, do it kind of like this guy did it. Don't do it like this. The parables are just stories. One of my favorite hymns, it says, "I once was lost, but now I'm found, was blind, but now I see." If you're looking to give value, the best way to do that is just tell your own stories. I heard a writer one time say, "Write what you know." And people think, "Oh, well, I want to be creative. I want to whatever." No, it's okay to
Yep.
base a character off of your best friend, or write, if you're writing a story about a grocery store, describe the grocery store in your hometown, because it's then real, it's tangible, and people just resonate with that. So when you're delivering value, I think it's what's so great about these videos you do is, and even just every single time I said something, you were like, oh, we just did this, I just did this, and that's going to resonate with different people out there.
Well, I appreciate you coming today. Thank you,
Appreciate
sir.
it, my friend.